Hi guys, welcome back to CashBright, your guide through the confusing world of personal finance. So if you follow the news, many analysts agree that the stock market as a whole is currently in bubble territory in the aftermath of most countries entering into lockdown. It is a perplexing fact which appears to fly in the face of Main Street and the economic fundamentals. American economist Paul Krugman suspects that for many investors, they simply don't have anywhere else to put their money, and it is perhaps this, coupled with an over-exuberant group of investors, that are currently pushing up prices. Now, drilling down deeper, it's possible to see that investors are favouring tech stocks. The basic logic is sound. Technology companies broadly should be less affected by lockdown measures and the uncertainty surrounding reopening the economy. But the surge in prices is starting to resemble the tech bubble that burst around the end of the 90s and early 2000s. The Nasdaq is up 12% in 2020, and whilst one can understand investors favouring the big hitters, such as Microsoft, Amazon, and Facebook, they have also feverishly backed companies such as Hertz, a car rental company which even filed for bankruptcy and became a big commercial casualty of the COVID pandemic. Another incongruous stock is Tesla, which jumped up 130% following the market crash back in March. Its stock price is close to $1,000, and this just doesn't tally with the company's expected earnings. Many analysts see that investors are buying stocks like Tesla, which is most notably a car maker, more because of the fact that they tend to be mentioned in the same breath as the likes of Google, Amazon and Microsoft. It must be said, however, that car manufacture is a different beast to the online business models of these big Nasdaq companies. And it's this kind of oversight by the market as a whole which perhaps points to a new tech bubble forming. In my view, technological growth stocks like Tesla ought to be viewed with suspicion, particularly in the short to medium term. It's very easy to fall into the trap of seeing price as an indicator of a company's inherent value, and to overlook the short to medium term commercial reality of the next few years. The stock market is likely to correct itself at some point in the not too distant future, and this will of course cause prices to eventually tumble to reflect the economic reality of our times. Tech stocks are a smart choice post-COVID-19, and I would still recommend looking in this sector for your own portfolio. But we need to also remember that economic and commercial fundamentals are king. One thing is for sure, the stock market is set for a lot more volatility, and I suspect this will include some ungracious falls in price for at least some of these hotly demanded tech stocks. Whilst we will only ever be able to definitively say that this is a tech bubble, once the bubble has actually burst, the jumping growth of tech stocks is evident, and this is certainly something to be mindful of when planning your own investment portfolio. Thanks for watching. If you found this video to be helpful, please leave a like and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.